Cardano fell yesterday by 4.96% after a little bit of a surge on Friday. And well, there's a little bit of concern as to whether or not we are going to see a continued kind of retracement or whether or not we are likely to see a continued push higher. So following on from the previous technical analysis that we've done on the channel, we were looking for a bit of a push to the upside after its most recent swing low, right inside this accumulative range between 66.15 and 68.74 on this 1 hour time frame. Now, we are still targeting out between 76.65 and 80.12 cents, with a key kind of breakout area of around 77.44 cents for the kind of bigger macro movements. So we are looking for this completed fifth wave movement. In the moment, we have a pretty good run to the upside, decent retracement, and then another kind of higher high here on this hourly time frame. This most recent retracement is quite interesting. We have a little bit of an overlapping nature of the candlesticks going on here, and we are holding a bit of a double bottom situation. Okay, so on the midnight candle, we do see a low of 69.35, and then at 0400 hours this morning, we can see here a low of 69.35. It was an exact double bottom, and we've bounced up quite nicely. So we are going to be looking for a breakout of the existing structure at 71.47. Once we break higher than that, we can be a little bit more confident about those moves to the upside. So we're going to run on the premise that a double bottom is bullish. We're going to be kind of looking at this saying, okay, we probably want to be thinking long positions. We'll take market entry right here, stop loss lower than the previous swing low. And of course, we're going to target out on that slightly higher range, right? So risk reward ratio of around 3.83 at this point in time. Of course, we could give ourselves a little bit more breathing room by dropping this down here to about a 1.53 risk reward ratio, gives ourselves a little bit more breathing room, and it assumes that we have this swing low in down here. Okay. Now, the reason for this is we are looking for a 5-wave movement within our 5th wave structure. Okay, so we will be looking for our 1.618 to kind of come in and around 79.37. So that's going to be the key area. Your kind of diagonal structures could be an interesting kind of thing to be looking out for between 75 and 76. But for the most part, this is kind of what we're going to be looking at. Okay, now if we go ahead and remove that off and measure this most recent structure here with our retracement, typical double bottom wave 2 situation, then our 1.618 happens to be 76.15. So you can see that there's a little bit of a convergence going on. We're looking at an idea of 1, 2, kind of 3, 4, and 5 up here to hit that kind of wave 3 area for our wave 1, 2, 3, down for 4, up to 5, and to kind of smash out those kind of targets. It may overextend in this particular case as we start to think about this. So it's looking bullish, right, from an Elliott wave perspective. A little bit complicated, I know, but nonetheless, it's looking pretty reasonable. Now, let's take a look at what we've got going on here from the stochastic RSI. Well, the stochastic RSI is in this oversold area, as you can kind of see down here, indicating that there is upward momentum available to us as long as the sentiment in the market remains, pretty decent. Now, if we turn that off and bring in the relative strength index, we can see here that we're testing this 50 level, and we are currently above it. Above 50 is bullish, while low 50 is bearish, and we could potentially see now a bit of a resurgence and a continued run to the upside. The MACD histogram is very interesting. Bring our price action back in here. We do have weakness within the selling side, and we do have, a little bit of weakness here within the buying side. So there's some bearish divergences, but they're very kind of subtle. They're not pronounced. So it's interesting kind of keep a close eye on that. But if we can actually get a higher high on the histogram, could be interesting. But within our 5th wave structure, I wouldn't be dismissing the idea of a lower high on the histogram, but higher high on the price action as we finish off the 5th wave movement, which essentially will be bearish divergence as we go up higher highs on price, but lower highs on histogram, basically foreshadowing a bit of a move to the downside, which is kind of what Elliott wave would tell us anyway. So as we kind of reflect on all of this, it looks pretty interesting. I think for the most part, we should be thinking up, not down at this stage, but I still would expect volatility, as I think that is the name of the game ultimately. Bring us to a 4-hour time frame. and things are quite interesting. So from here, we can see that there's still higher highs and higher lows as we look to finish off this fifth wave movement. We can see here that we had a bit of a break, I believe, so high of 72.97 cents yesterday. And, you know, we are looking for, or we're looking for 72.90. And so we have broken higher than the previous swing high, giving me confidence that the wave 4 is done. Our stochastic RSI is still correcting down, but can reverse quite quickly here. So it'll be interesting to see whether or not we just range sideways, consolidating around the 50 EMA, 50 SMA, and above the 200 EMA before we actually get that next run to the upside. So we'll keep a close eye on that. There's a little bit of interest going on there from those kind of perspectives. So we can't kind of completely dismiss the idea that we have another kind of shakeout, just quickly grab some liquidity before launching. So we want to kind of keep that in mind, which is why having the stop loss at a reasonable area, if you are to be going long, is a sensible idea in my humble opinion. But that's all it is, just my opinion. I'm obviously not a financial advisor. I can't give financial advice. All I can do is share my thoughts and opinions on the data in the charts as I see it. The relative strength index above 50 is again bullish area here. And so it's possible that this does turn into a bit of a, push higher here for the price action. MACD histogram, also interesting that the volumes are low, both sides on the selling and on the buying. So we had bullish divergence with the lower low in price action, but the higher low in the histogram. And we have rallied up and broke above that previous swing high. The positive buying volume there on the MACD histogram, it isn't looking as good as it needs to right now. So we do have that little kind of bearish divergence forming there, but it is not as pronounced as you'd want it to be. So you take it with a pinch of salt. The accumulation distribution is sat, in an interesting spot. There's definitely been a bit of a distribution into these kind of lows that we've been experiencing, and accumulation hasn't really happened on these kind of zoomed in views. On the daily time frame, though, there's a lot of accumulation happening. We'll talk about that in a moment. So for our kind of 4-hourly chart, looking pretty good. We're looking for continued push higher here. I don't think we're necessarily done just yet. Roll this up into that daily time frame then, and here you can see that we have obviously the lower lows, the lower highs. We obviously have the accumulation zones a little bit lower, and we obviously still have those potential higher points as well. What's really interesting about all of this kind of setup that we can see at the minute is that we are kind of finding resistance on that 200-day exponential moving average, right? And you can see that with this white line coming through the chart here, right? You can see that they're kind of getting a lot of resistance here. Now, a breakout of this area can take us out towards those 76 to 80 cent ranges. Okay, and of course, there's our previous areas of resistance a little bit lower than that as well. So expect some volatility. If we can break the 200 EMA, then I expect to push higher. Resistance here, though, could quite easily create a little bit of fear in the market and suppress that price back down a little ways. So we want to be a little bit cautious here on this daily time frame. There is quite clearly a big kind of area of resistance around the 200 exponential moving average. And although we have hope for that breakout, say, between 76 and 80 cents, we have to kind of really take a close look at this and be realistic about it. Yes, there's some positive stuff going on the smaller time frames, and yes, it's possible for this breakout situation to happen, but this market, the traders, they're not going to have any confidence if we cannot get a closed position and a strong closed position above that 200 EMA. Okay, now from our stochastic RSI, we're in a position where we are above 50, still in bullish territory. We're not overbought. We could, of course, continue a rally higher. Okay. So it's okay. If we take a look at the relative strength index, it's above 50, plenty of momentum and growth potential to the upside. Okay, so the question is, can we claim that 200 exponential moving average? And if we can, then there's a good chance that we can take out the 80 cent targets. Now we take a look at our histogram here. We can see that there's nothing really to be overly too alarmed with. We have growth within our histogram as we have higher highs, and as we've corrected down, we're still in pretty decent areas. So we are looking at that 200 EMA, that trend filter, and hoping that we can actually get some decent positions above it. Now, as I said, if we zoom out of our accumulation distribution, you can see that there's been a little bit of distribution here, but we are still sat significantly higher than what we are in October of 2024 and November of 2024, which means that a lot of accumulation happened on the price action during that run to the upside, and there hasn't been a lot of sell pressure, right? We haven't seen a lot of people just completely liquidating their positions and, walking away from Cardano. Cardano. They see this as a corrective phase, as I do as well, with all the overlapping price action. And we can see that there's potential now for some more accumulation to happen in these lower ranges. Anything essentially lower than 53.95 is a great place for accumulation. We've tapped it twice already, so we want to keep that in mind. But as it kind of sit here with the price action, we are still bullish on the macro view, as I often say, by the end of these videos anyway, that we have some pretty decent growth potential, right? We are looking for the lower side between $3.09 and $4.67, and on that kind of more kind of typical kind of level, we're looking for $5.27 to $12.91, and on the highest possible side, it's $38. So, we're looking at the conservative targets, in my opinion. We're looking for a diagonal within our C wave structure as it sits right now, based on the patterns that we're seeing. Our kind of ending diagonal pattern would be kind of confirmed at around $9.48, as long as it was a three-wave pattern. Anything lower than that is probably going to have to then fall into the territory of either expanding diagonal or contracting diagonals. And then, of course, we have that wild card for $38, which is a nested impulsive run that we just can't really see just yet. So overall, the charts are looking pretty good. I'm not concerned about any of the price action when it comes to Cardano. It's just a case that we have to kind of go through the process, and it's looking pretty decent in the longer term, in my opinion. So I think we're going to see some pretty good growth on ADA. Will we 10x from here at 70 cents? It's going to be very, very interesting. If we can, then that's going to put us right in that $7 range. It'd be very, very nice indeed. You guys can let me know your thoughts in the comments, or join us in our free Discord server and let us know what your price predictions are when it comes to Cardano. If you found this update useful and informative, smash that like button, subscribe if you're new, and I'll catch you in the next one.